Hello, ladies and gentlemen, and welcome back to a special weekend edition of our show. Well, it happened as we expected this week. Not only did we get the trendline sell-off, but we also got the rally. Why? Simply put, it was Wall Street and the trillions of dollars of options expiration manipulation they needed to do. I can tell you this, they are celebrating this weekend as that was a good week for Wall Street. And hopefully, if you've been watching our videos, you were clearer on the markets. But we now move forward to a very important point. We end January with earnings season in the US, really starting to kick off with Tesla and other big names coming out. But more importantly, we know that we're looking for that trifecta. We've had a Santa Claus rally. We've also seen the first 5 trading days of 2023 being positive. But if we get a positive January, this can have incredible impacts into the rest of 2023's expectations. Join us as we unpack stocks, commodities, and cryptos in detail for the weeks ahead. Well, welcome back everybody to the Daily Show here. We'll be talking about the news headlines, the macro data, the key levels, and the biggest zones that you need to be watching throughout the next few weeks. But let's discuss 55,000 global tech sector employees losing their jobs. Unfortunately, this is going to be the story of 2023. We know that a rising unemployment number generally precurses a recession, which most people are expecting to be called in 2023. We obviously do think this is going to happen. I've got some great macro data information coming up in today's show to realistically share why we've got so many reasons to believe that things could get a little bit worse before they get better. Let's now break down some of the charts that we've shared over here at FX Evolution over on Twitter. Links in the description down below. And there was a myriad of really great information coming out this week. Firstly, we know one thing. The market and the Federal Reserve are fighting each other at the moment. Now, they say don't fight the Fed, but realistically, the market is calling the Federal Reserve's bluff. Not only does the market not believe that the Federal Reserve will get above 5% plus in its interest rate hikes, but they're saying that the damage to the economy throughout the last months and year has been so severe that the expectations of stimulus, as in rate cuts in the future, are getting steeper and steeper. Take a look at this chart here and the changes from December of 2022 all the way through to, of course, the end of this week. Yes, it's a pretty steepening rate curve cut, and basically this is showing you that not is all well in the markets. And if the market doesn't get what it expects and the Federal Reserve does something else, that's when fireworks tend to happen in markets. I also wanted to give a big shout out to everyone in the community this week. We've obviously been talking a ton about options. This was a huge expiration, and it worked out within our slot as we thought. We, of course, were aiming for that 395 to kind of 398 area. And guess what? The market did it. But it's really important to note that the S&P 500 was the one to watch this week. Even if you traded other pairs, never discount the US dollar or the S&P 500 in 2023. It can lead you, it can show you the better setups and the better entries. And that's the one that we always want to be watching. Did we get a Max Payne read? No. Did we expect it? Not really. Even if you have a look here, I've highlighted some of the things that are the most important, but take a look at those 400 calls. Every single day throughout this week, all we saw was retail stacking those 400s. And I'm pretty sure a lot of this was retail, especially after the Tuesday shenanigans on what was a shorter week in the markets. There are some other big bits of data, though, that we need to share. Do we see leveraged funds continuing to load up the shorts? Well, frankly, yes, we do. August the 16th of 2022 was an incredibly overshorted zone by the bigger players. The market then started to fall. We've seen a resurgence of course, shorts as we've hovered around this 4,000 zone. And this is something that we'll have to keep watching as it's incredibly important to markets out there. Also, the top 20 sectors on the session, on the Friday session, did they line up with retail realistically jumping back into the markets? In general, yes. I mean, look at some of these names. We've got SPACs, we've got the ARK ETF, 3D printing, Tesla Concepts, EV chargers, a lot of the normal names. Though I would say this, AI style stocks, I'm still incredibly bullish on these. And I think the prices are getting pretty fair in comparison to where they were moving forward. If you're a believer in chips in everything, it might be interesting to look into AI, as the leaps and bounds that have been made over the last couple of years have been incredible. And I think the market could be discounting those over the next couple of decades. So what about the forward PE ratios? Is the market cheap or expensive? Well, frankly, it's average. This is the normal price of a market during what we'd call neutral deal. We like cheap. We obviously don't want to buy expensive, but for longer term investors, you do need to be looking at things such as forward PE, which we'll be sharing on this channel, and making sure we're paying attention there. Smart money versus dumb money hasn't really changed too much. We did see a huge uptick in dumb money around that 4,000 line. No wonder Wall Street took the massive pain train to them earlier this week. And the main reason was because there was just too much FOMO in the options market. And Wall Street's very good at extracting that FOMO from us, the retail trader. So what about the macro data? Everyone loves macro at the moment. And I remember when macro wasn't working for pretty much a decade since quantitative easing, but it's back in focus. And of course, macro does work at the moment. Now, interestingly, by some macro models, which tracks kind of like 7 of the main macro stories, we're starting to see a huge decline. Now, it tends to be when we go underneath kind of 30 and still above, like, let's say 20, we tend to have pretty bad times. Now, also, when this has happened, it's called every single recession. So that basically means that when we've had those 7 macro fundamentals realistically going bad, it's usually meant the US was in a recession. We hadn't been called yet, and it has never been wrong. Now, what about the returns for the market when readings like this have occurred? Well, I've got one thing to say to you. It is not very good. In fact, it's actually negative 30% on average annualized return. Now, of course, this is just one data point, but it's another one that leads into that story that maybe not all of the biggest price drops are priced in yet to the markets. And the market is certainly not as fearful as you would expect during a time such as this, with so many uncertainties in the world. So what has Goldman Sachs got to say about, of course, the hard landing versus soft landing scenario? That is, how bad is this macro data going to be? Just remember, we've covered this a few times. Goldman Sachs low this year, they expect during a hard landing around 3150. And during a soft landing, they're still expecting a kind of doubling bottom. So that is that the market will kind of hover around, decline, push some of those lows that we saw in 2022 and then potentially rally through. And that's kind of the Goldilocks style scenario. So Goldman, not necessarily as positive as some others on the markets out there. So we talk about the trifecta at the start, and that is the Santa Claus rally the first 5 days and January return that is positive. The markets are up during January so far. This week could change this. And when we've had the trifecta and a previous year of bad returns, the full year returns of that next year, being 2023 in this case, have been incredibly good. We don't want to discount this. It's actually a pretty well-known, I guess you'd say, data stat throughout the markets, and we will be looking at it. So January, the next week, it's coming up. And as we mentioned, when we look at the puts later for the S&P 500, you may be pretty surprised how little puts there are in comparison to what just expired. So what about the rotation within the markets at the moment? Well, it was the normal subjects on the Friday, basically all of the retail style stocks doing very well. Semiconductors, communications, Russell 2000 stocks, they were going absolutely wild. This has been in line with the last kind of 5 days, even 10, even 15 days of trade for 2023 and 22. And basically, it's not been the time that we've seen the normal subjects, utilities, staples, and healthcare loading up before a potential crash or collapse going into the market. Remember, we are still in a bear market, and we're certainly in a bear market zone. So if these stocks weren't getting loaded up, that is something that's very strange. Could this be just more of a buying the rumor into, let's say, earnings season, and then they dump these stocks, move into, of course, the defensives as the market starts to drop off? It's something that we haven't seen in a while, but certainly, we'll keep it in the back pocket because we do usually want to see staples, utilities, and healthcare getting loaded up by Wall Street and going sideways, that's usually a great sign that they're ready and they're about to drop the market through. It's only one signal though, so of course, as always, we use many on this channel to try to build a case either way. This week, moving forward, we have the big one here, Tesla. Will this be an interesting point? Absolutely. We're seeing some buying in Tesla. Do we have that buy the rumor, sell the fact? Now, Tesla does tend to do this as a stock, so does Apple. Anything that's retail related, everyone gets hyper into the earnings, and then they can't understand when the earnings actually hit and the stock goes down. It was overbought, guys, moving into that. So that's something that you'll always want to be keeping in the back pocket. But yes, Tesla is probably the biggest name coming out this week. We've also got American Express and, of course, some oil companies as well reporting through. Let's move over to the VIX and get into the charts here before we get into the major indices and big stocks. And we'll start off with the VIX. As you notice here, 20 for the volatility index, basically right on the normal level. We're looking for a 45 plus to show us that there could be actually a bottom in the markets. We haven't seen that. I think a lot of people are looking for that one though. So will it happen? Well, it should. It always usually does. But of course, we don't know anything. We always bring as many data points as possible together. Interestingly, the last 2 days of trade, we've actually seen yields spike up. Now, this has been negative for treasuries. And I want to just highlight here, this is an incredibly crowded trade. Everyone loves treasuries for 2023. I'm not going to say I don't. I actually like treasuries as well. But it's all about timing and price with a pair like this. We did see the island reversal and the sell-off. This could bode poorly. Maybe treasuries are coming back down to that 102. I don't like what I've seen in them so far. That is not the type of thing that you want to see. So if we go down to a 2 hour, you can really see that gap up, gap down scenario. Treasuries at this stage could be a bit shaky moving forward into the next week. Now, if treasuries are going down and yields are going up, shouldn't that mean potentially stocks are going down? Something we'll bring up a little bit later on. Let's move over to the US dollar. It didn't quite do what we'd hoped it would. We saw that big rebound off the low. This was massive. Of course, it took the lows and instantly found buyers. I liked what we saw part of the session, but then by the end of the day, it was not so good. I mean, that's not exactly the candle you want. We'll set some alerts still above here. We notice that the weekly closes as a long leg doji, but yeah, not really the type of close that you'd want. I'm going to set an alert above 10235 for the week ahead. And the reason why is if we do get a rally through, that getting smashed and taken out as a new close above will be incredibly significant. This could still be accumulation. It looks like it could be based on the euro, which we'll take a look at in a second here, but very, very, very close to tell. This was the area we expected sellers to come back in. They certainly did, but then it rallied back up and closed at that level. Is this part of either a big accumulation getting ready to break out or a distribution? Well, a lot of it comes down to some of the rejections that we've seen. So you can see here on the daily, this super strong amount of rejections, and then these last 2 days moving up. We get a new alert high, get ready to get squeezed. Dollar will become crowded towards shorting. Euro will go super long and everyone will get convinced. And that's the time you've got to be most careful. But this is still a very critical level. If we take a look out and go back to the previous period, you'll notice that we had a lot of structure through here, breaks down, structures up, most likely a heavy supply, and then a dump off. This is a zone where we could see turns and we're open to the idea. Even though the trend's been super up and you want to follow the trend as your friend, this is a very critical zone for both the DXY and the Euro US dollar. Let's move over to the gold trade at the moment. This is still very long. There's no signs yet of superior weakness. We have had a little bit of a sell-off here where it took that low, but we've still got super strong demand through the 1910 and the 1900. For anyone that got that 1900 underneath by this week, congratulations. Following the trend has certainly paid off. And we've got good inflows coming into gold still. I'm looking for the party to continue and hopefully get some kind of blow off. And that's what we've seen in the previous rallies for gold. Everyone gets super crazy about it. We haven't seen necessarily a super crazy move yet. I'm looking for that. If we get it, I think we'll know what to do. Let's find out. What about oil? Well, it continued in a pretty strong direction. We haven't got the monthly close yet, which we'll be looking at this week. Again, monthly close, January is going to be super important. This is huge. You know, these wicks, we've got 1, 2, 3 big wicks here at the time of this recording. How this ends up is going to be really, really important. So we'll actually end it up on Tuesday, the 31st, which is about, I think, a week and a bit away, but the monthly close is going to be critical. Let's take a look at the weekly. Again, nice closure. First time we've ever closed above these levels. So you'll notice there, we have never closed above these. Now we did. Go down to the daily. Again, fairly strong. Highest daily close that we've seen. And we've got that consolidation. I'm still thinking this oil trade could be moving towards those 90s a barrel. I know I've been a negative bear on it for a long time, and rightfully so, but we switched that idea within that 77 towards the long side. And that's because things started to look like they were accumulating. Big level for it this week. Obviously, we're looking for new highs, and then hopefully a push through to 90 plus a barrel. Let's move over to copper. Now, Dr. Copper, this is critical. Chinese New Year obviously starts this weekend. Happy Chinese New Year for anyone that does celebrate it out there in the channel. I hope you have a great week or two off if you do get that. But this is critical. We're seeing metals running into Chinese New Year. No surprises there. They often start to struggle, if not during or after Chinese New Year. So I do think that the metals trade, which has been a crowded trade, could be getting to a close or an end. Somewhere in this next 430 to even 460 range is probably where I expect Dr. Copper to start to turn around and for it to take a lot of metals with it. Let's move through to stocks. Pretty nice stuff here for Tesla. You can't hate. That was a strong weekly close. Ended up getting back up to the 130 area, which was a barrier we talked about, that 130, 135. Hugely bought calls by retail. So much losses in options this week by retail traders not knowing what they were doing. Hopefully a lot of you were well better prepared. If we're talking about the expectations this week, the options market believes the high is 144 potential and 122. 68% of the time the market will remain within this range. Basically, that's just the general statistics. And if we go through the daily, there's not much to hate about this. Could we continue to see rallies in Tesla or at least stagnation until the earnings result? Generally speaking, yes. I mean, Tesla tends to run in or at least hold into earnings, and then we get the earnings results. Just go back through history and you'll see what I mean. If you go through some of the times of earnings in the past, you'll get a bit of an idea of how Tesla reacts. What about the options? Well, as we mentioned, here are the big ones, 130, 135, 140 this week. Not much payoff. Who was this? I don't know, but sad face for them. They lost a whole bunch of money. Let's move forward to the week ahead, though. 3.5 million this week, the 27th of January, down to 483. Now, already people are stacking calls. If I was Wall Street, I would try to get lots of people to buy lots of calls and then dump it right back down. Hey, that's just what I'd do if I was Wall Street. We'll find out what they want to. But you can see here the call action seems to be a little bit stronger than the put action. Max Payne's 130. In terms of walls, if we end up falling through, 100 still is one of those majors. That's over 30% down now, though, if it does go down there. But watch these calls. As we lead into Tesla earnings, I think that's going to be a super important point for these markets. Let's take a look at Apple. You can't hate on the chart either. It actually looks pretty bullish after the close. I'm not sure what to make of this. I think I'm going to use the S&P 500 more than Apple here to come up with any conclusions. If we go down to the 2 hour, it didn't quite make a new high past that spike, but I think Monday's trade will be very, very interesting for a lot of these pairs. Let's have a look at Google. Strong moves, big trend line coming up here for Google, as well as that horizontal resistance. This had some of the biggest breakouts for the week. This was huge. We end up moving forward 2 days, strong movements, 91 all the way into 99, basically a 10% increase. This is a very strong move here from Google, but it's about to hit resistance. I just wanted to show everyone that. Now we get into the indices. This is where things get interesting. Look at this. So the Dow was one of the best performers of pretty much the back end of 22. Then all of a sudden, look at this week, absolutely no move on the Dow in comparison to others. So it looks like the old economy could be a big part of the sell-off should we start to see a sell-off in markets. It didn't get that big resurgence. Let me compare this to the Russell 2000 for you. Have a look at that. Huge rebound here on the weekly, and the daily was massive. So we know exactly which level we're looking at. We are very, very open-minded to what goes on at basically 1880 to 1900. If we get closures above here, we have to expect potential further squeeze to come through. Of course, we'll need the S&P 500 with us, but that is something that could happen. Now, if we get a new low that forms, that's going to be a price of around 1800. I think it really could be on for the sellers, and we'll explain that with the options very, very soon. Let's have a look at the US 100, the Nasdaq. Again, very similar. What looks like a very strong candle, back at critical downward trend line, 61.8 fib retracement of the previous high to low area. Very strong looking market. Could it be stopped? Let's take a look at the 2 hour here just to understand what just went on. Big rally. We thought the rally would come through. Obviously, we did it with the S&P 500, but this was very aggressive all the way back up. Is it potentially trapping retail trades? Imagine this. The S&P 500 kind of holds, spikes up a little bit. Nasdaq takes the high and then sells off. Oh, that'll trap a lot of people. Be careful here this week for the Nasdaq. S&P 500, let's look at the options expected high and low coming in. Nothing too interesting here. 401, 390, 390 being kind of that critical level. Again, I just want to note that there was a gap up that rallied, held, and then there was a gap down. That's what we call an island reversal. Now, even though it's back up here, island reversals still have some statistics with them. They're about 60% good most of the time. So it's going to be a very critical week depending on what happens here for the S&P 500. Here's the SPX. We're back on the daily 200. We know where all of our gaps are now. We also know that there is this one here just got filled in terms of the close for the day. So basically, we are looking at, if we sell off, the potential of a 37.50 or even a 35.80. If we see huge rallies, 41.13, pretty sure that level will be very, very hit. And then, of course, 42.27 to 4,300. Those levels are key. So whatever way we move, a big move is probably going to be coming for these markets. Let's move over to our analysis of the US 500 together here. Oh, this is a tough one, but also very interesting. It actually hit the perfect zone. So I like the 39.70. We talked about this idea that it would pull back to this 618, I guess. And this is a critical point as we see markets open on Monday. We do know that if the market is going to make a new low after this, that it probably, well, I think it'll hit 38.10 pretty easily. But then the question is, can we get that low into the 37 kind of 50 gap fill? I think that's probably what the market will do. The way it'll get there, remember to subscribe if you're interested in that, and we'll be following along with it. But we can't discount the idea that a new high could occur. If it does, well, again, we're looking at those 41.13s and others. This is the chart to watch, though. I believe that the dollar index and probably the US 500 are the two most important charts at the moment in 23. And this is a absolute critical zone for the US 500. Let's scroll down to a smaller time frame. Have a look at the 15-minute and just check it out. You can see here, it did pretty much clean up a whole bunch of uncertainties to do with that massive drop off. It's, just a super critical level here for the markets. And I think I'm leaning towards the bear side from a current level, but I'm open to new highs if they should occur. And then, of course, hopefully we'll know what to do. Let's move ahead, though, with the options expiration. And specifically, let's talk about the 27th. So we had 5 million almost units. Now we move into the 27th. And you'll notice there are some 380 puts. But what else will you see? There is not anywhere near as much here as there was moving forward this week. So all of a sudden we open up this potential of the next couple of weeks with markets going down. Let's move over to the third of February. Well, wait a second. We've only got 380s and 374s, and again, very small amounts currently in the market. Then we move forward to something like the 10th. Again, very little amounts in the markets over here. And then we move into the 17th, and that's when we start to get those big amounts, 158,000, 3.4 million units. It's the third week options expiration. So there's actually a bit of open here for the puts, as in the market to actually sell off and then potentially do a little bit of a rally switch sometime around February. The next 3 weeks, super important. If bears are going to get control, it's now. That's what they've got to do. They've got to get control pretty much now of the markets. It's their best chance to get through all of these puts. There's just not as many in the system as there has been historically through the back end of 2022. And it's just there's puts everywhere in these 3-month expirations or 3-week expirations. So very, very important level. If crypto's anything to go off, maybe we're not going to sell off just yet. But look, next level achieved by Bitcoin. We didn't get that new low. We certainly wanted to see that for really big bearish pressure. We hit the 22,613. If this gets broken, I think you guys are pretty well aware the next level it should go to around that 24,600 to 25,000 zone. A lot of people will be looking for that. But look, critical level again, if it's going to sell and the S&P 500 is going to sell, this is the type of zone you're looking for. I'm pretty sure we'll know when it's on, and that's going to be when we get a new low. So we probably want underneath this 20,250, and we'd be looking for something along the lines of weakness into something like that, some kind of rally, then sell. Ethereum, very, very similar. Critical level for Ethereum, back into these highs, and we know where the lows are. So at this stage, we've got a higher high. Do we end up getting a lower low? We'll find out this week. But yeah, critical zones for crypto. They are right on these next levels, and they moved quickly to them. What about the news ahead? Well, it's Chinese New Year, so expect some, I guess you would say, lowered volatility and lowered volume and liquidity going through during the Asian session for anyone that trades currencies and gold and commodities. And then we have a whole bunch of economic news coming out from some places around the world. But I think the most important one's probably, not really the advanced GDP, but that's 8:30 a.m. Thursday, January the 26th. And then the next one is Core PCE Price Index, and that's coming out Friday, January 27th. It's still about earnings. Tesla will be interesting. Oil companies will be interesting. And as we move forward, that's going to be one of the big things that you're wanting to look at. Just a quick reminder, follow us over on our socials. Of course, we have a whole bunch of other shares, our Twitter. If you want to get 3 free trading cheat sheets, you can do so. Just link in the description down below and you'll get it emailed to yourself. And, come and follow us also in Discord. We've got an amazing community over there. Thanks so much for watching. We'll see you in the next video. You have a great weekend. Bye for now.